Okay, Megawhale team, welcome back to another video. We've got a special video today. We've got WolvesOfCrypto joining us on the channel for a collaborative video. We're changing up the way we do our collaborations. We're going to be doing almost like a featured video with each other every fortnight. So next fortnight, I'll be on Wolves' video. Go ahead and follow Wolf. You can find his stuff down in the comment section below, to his YouTube, his Twitter, and all of his other stuff there. Wolf, how you doing today, mate?
Not too bad. Yep. Not too bad. Yourself?
Yeah, going well. We're going to take a look at Bitcoin today, I guess. Talk about that 9-year trend line and talk about, what we think is going to happen in the short term. I think you've been talking a little bit about where you believe Bitcoin will bottom, and you've been kind of leaning more towards a double bottom around that 17,500 mark. Is that correct?
Yeah, so either a double bottom or down lower at 11.5 to 13.8, but double bottom certainly the first target. I don't think we'll see a high low here.
Okay, well, I guess I'm going to jump in on the macro and just kind of talk a little bit about what I see and go into the short term and bring up the DXY, and you can go ahead and talk about what you want to talk about. But we basically talked about this because in the last day we had a very, very steep drop, and obviously the loss of that 9-year trend line, as we can see on this chart, which was sitting around $20,000. We've kind of just pushed back above it now in the last 24 hours, but we saw a pretty significant drop down. And there was a lot of blood in the market, if that's one way to put it. There was a lot of blood in the market, but we saw this descending, broadening wedge pattern. And we told you guys on a post the other day that we expect that move upwards to about 20,300. And obviously since then, we've seen that price move upwards there, right up to that target. And on the short term, guys, now that is still now going to be acting as resistance. So we have the 20,300 resistance currently. We have this upper trend line acting as major resistance. And obviously we do have now that 9-year support line acting once again as support. We have seen a bit of a dent in the armor, a bit of chip in the armor. Obviously a breakdown over here on that 1-day time frame is showing signs of weakness. And we have pushed upwards for a bullish engulfing candle, but we don't really have any confirmation of where the trend is going as of right now. There's still a very high chance we do drop down. So we're going to kind of talk about what we talked about yesterday. Again, we're going to be talking about, where we think the price can head from here downwards, and what we need to see for the price to actually flip and continue upwards from here. So I'm going to quickly jump on that, and Wolf, I'll get you to talk about what you think about that as well after.
Sure.
But what I'm kind of aiming for here is if we do get rejected from this level here and we lose this local low again, this local low is going to be our trigger, that 19,000 600-ish level is going to be our short-term trigger, and that's going to send us in a continuation back into this range. And this range, I believe, sits around $19,000. Obviously, we have a lot of support around this level over here, and moving back to that local low, which is around 17,500. And obviously, that's where we do expect that first potential bottom, and that will correlate or line up with our bottom that was placed in June, where I said, 9-year trend line bottom, that's going to be a potential bottom, just retesting that level. Now for the upside, we do have a lot of resistance above us. Obviously, we have that 9-year support line, which we're currently tackling again as resistance. Now, although we've pushed back into it, we haven't claimed it as support yet. To reclaim this as support, we're going to need this daily candle here within 23 hours to close above that support line again to actually reclaim that support. Currently, it is now still struggling to be support. So it lost support over here, we closed below, we've pushed upwards, and now we're trying to close above it to confirm the support again. But obviously with the resistance at 20,300, it's looking quite grim. We can definitely push back down. So on the upside, guys, we will need to push above this level here, 21,750. To get any chance of pushing upwards. And of course, that level was our major resistance around 21,750 to 21,800, which we got rejected from for like a whole week at this level here. So the short term is looking, I would say, if we're looking from a trend perspective, it is looking more bearish. Now, from a macro perspective, we are technically still above the 9-year support, but obviously we have kind of really dented that armor. We have a lot of bearish indicators flashing. A lot of things that are happening. I think Wolf will go into this a bit, but a lot of things are happening in this scenario, in this cycle, which we have never seen before. For example, losing the 12-year support line, never seen that before. Rejecting on the 200-day moving average, never seen that before. It's never happened before for Bitcoin. And obviously, there's a lot of factors influencing how the price is moving here, besides just natural price action. We've got the economy, we've got the Feds really pulling and twisting the market in the direction they want it. And obviously the global recession, there's a lot of stuff going on. Anyway, I'm going to throw it over to you, Wolf. kind of talk about what I just talked about. Tell me what you think. Do you think we're going to be heading to that level? The short term, do you think we're pushing up higher? Do you think we're going to get rejected from this 20,300 level? What do you think?
Yeah, I'll share my screen. So yeah, essentially, look, Bitcoin's in. It's hard to say right now, but what I will say is this, right? I don't know about you, but my macro uptrending support line, I think it depends on the exchange chart, because while you were doing that, I actually looked at the Kraken chart, which is what you were using, drew it the same way, and we were above it. But if I look at the Bitcoin Liquid Index, for example, or Bitcoin Index rather, we actually are still below it. So I'm not sure. I think it's
Yeah.
that's why it's confusing me a little bit.
Yeah, so with the Bitcoin index, sorry for jumping in, I think the 2020 COVID crash, the wick was priced in different.
Yeah.
So I priced it in a little higher than every other chart. But the Bitcoin index chart is the only one that shows us below that trend line. Every other chart
okay,
is
well, there you go. There you go. Yeah, okay. So I was going to say that was showing a little bit of confusion, but regardless, I mean, I would agree with you anyway, because generally when you see a breakdown from a 9, 12 year support level, you're going to see a little bit more than a small little drop and then nothing. You see a drop, you see a big drop, and I suppose we did see a big drop, relatively speaking, but it wasn't ridiculously massive like you'd expect from a 12-year support or a 9-year support breakdown. But regardless of that, I think that regardless of whether it's above it or below it or not, like you said, it's definitely showing weakness, and it's not a good sign. You can't play it off as a good sign at all, because it's simply not. And I will say that is probably more of a weekly chart support resistance zone, that trend line. It's just such a long-term thing that I don't really think daily candles particularly matter too much around it. What I will say is that if we're looking at this bear flag, which in my opinion is a bit more of a concise structure, because the 12 and 1 year support line, when you get a support line playing out on that much of a long-term scale, generally speaking, you can see closes above it and below it, by margins of a few percent, and generally speaking, it doesn't really consist of a major breakdown or break upwards, in my opinion. I think you can jump around a little bit with lines that long. But for example, this bear flag, right? This is what I was looking at yesterday on my channel. All right, so if we take a measured move from this bear flag, let's make this line pink so we can see it. I know my chart's a bit messy, by the way. I'll explain it all in a second. Take a pink move from that bear flag, apply it conservatively for a breakout, right? I apply it from the last retest at the top. It's more conservative, especially on bear flags, because bear flags can be very over-optimistic. And you can see that's targeting that 11K level. Now, I'm going to speak about that in a second. But if we actually, again, draw in this miniature bear flag that we had, and if we zoomed in on a shorter time frame, you can see that was actually a mini bear flag, in my opinion, and take a measured move from that bear flag, it's actually targeting a retest of the low at 17.5K. And so, that doesn't mean much by itself, but what we have there is a target from the bear flags of 17.5K, which of course is a retest of the low, and then a target of 11.5K, which of course, in my opinion, is going to be a retest of a very major support region if we do drop below 17.5K. Now, what I would say is that, since we've got those two targets active as per those bear flags, what I would say is that, if we show weakness to this macro line, which we've already done, I think it's very likely we drop through this now. I don't think this small bounce, on for example, apparently on every other chart except for this chart, I don't think this small bounce will hold above the line. I think that after such rejections on, for example, S&P 500, it's still drifting. It hasn't got support yet. It's still going to be moving down slightly towards its nearest support if it respects that support line. For example, Ethereum is something that actually does have support, but what we can see is that it's not bullish at all, because what we have is actually a massive rounding top formation and the potential to form something like, I wouldn't say it would be a clean one, but something like a head and shoulders formation, but it's certainly a rounding top. So yeah, that's found support. S&P's found near support, but there's no real support here. I think that's something we can agree on. The next real support, obviously besides the macro line, that is dented now, the next real support is actually stemming from the 300-week SMA at around 17.5K, and we do have the targets from those bear flags to back that up. And, just looking into the macro, I don't like saying, oh, but look at the macro, it's bad, but that's exactly what I'm going to do. It is particularly bad. I mean, the DXY, yes, it's currently rejecting, but it has shown more strength. People thought it was topped out, and if inflation did in fact top out during the month of June, you wouldn't necessarily be seeing the DXY continue to skyrocket. I mean, that's not what we've seen previously. Now, I can't show it now because I don't have a chart active, but I did look at it in yesterday's video. When the inflation tops out, if we see a CPI reading and it actually leads to a top in inflation, that generally speaking means within a matter of a week or so, the DX, or I should say a month, the DXY tops out. But we've actually seen it plummet, skyrocket up to new all-time highs. And yes, it's rejecting, but still did it nevertheless. And also, bond yields, for example, are still moving upwards. In fact, we've just broken a bull flag or something resembling a bull flag, a pennant, sorry, to the upside. So yeah, I'd say the macro is still bad. And obviously, one more thing, I am of course a believer in the 4-year cycle. And I don't necessarily have any reason to believe that the 4-year cycle won't play out as expected at this point, especially considering the weakness we've seen around the macro line now. Because I think the macro line is probably the one thing that kind of held me back from 100%. Being like, oh yeah, 4-year cycle is going to play out. I think that it is very likely to play out now. So a Q4 bottom would be a play in my opinion.
Yeah, well, good points, Wolf. And I think there's a lot to talk about there. I'll go ahead and screen share. Let me just find which one we want to look at over here. Always have trouble finding which. We've got so many tabs open, always have a bit of trouble finding which one we want to look at. So let's kind of break that down. So you talked about a lot of things, and I guess first and foremost, we kind of talked about there being no support between now and 17.5. Now that's something I would disagree with personally. I would say there is support between here and 17.5. Now,
so can I just say, the 2017 all-time high is probably a support you'd be looking at, a minor support, but I'd say there's no major support really.
Yeah, that's what I was going to get into. So I don't think there's any major horizontal support between here and 17.5 besides that local low. So obviously the local low, or what we can say the bottom for now, as we have, this is technically the bottom for now. That is our major horizontal. I do believe we have a support resistance range between 19,000 to 17,500. Obviously the 2017 all-time high, and from what we have from the wicks in this range, and prior dating back to 2020, we have a fair bit of support within this range. Now the thing is, if we do come down and retest this level, I don't believe it's going to hold very well. What I would personally like to see is some sort of higher low around about in this level before we push back up if we want a chance to move upwards from here. Let's take a look at the DXY. So obviously DXY is a representation of how cash basically flows from assets or out of assets into assets, all that kind of stuff. When we see the DXY rise, we know cash is flowing away from assets into cash, and if we see the DXY go down, we know the opposite is happening. Cash is flowing back into assets. So we can see a local high or local resistance here on the DXY. I don't really like to do too much technical analysis on the DXY just because there's so many factors that go ahead and influence it. But we can generally expect from this chart is if we see the DXY drop back down, we can expect a market recovery. And if we can see it push through this local high, we can expect that trend to continue and see more pain, more bleeding in the market. Now, obviously that's something we can't really disagree on. That's just how it is. Hey.
Yeah.
But you mentioned the 300. Was it the 300 moving average or 300 SMA? Which one? We're
300 week. Yeah, 300 week.
Yeah. Now you mentioned that to be support. Now this is where I do strongly disagree, and this is kind of something I've disagreed on for a while. I don't believe moving averages are supports. Moving averages, in my opinion, are not support. As per definition, not really supports. They're areas of which people potentially look to purchase, but they're not actually supports, because what they actually are is just the average price movement over a certain period of time. And the average price movement over a certain period of time cannot actually be support. It is just merely an average price movement. So I don't think the 300 SMA will be a support line. I don't think we're looking for support. I do believe if we do test that level, we're probably going to go through it. Because, we're doing things this cycle we haven't seen before. Like we're rejecting of the 200 moving average on the weekly. We're losing a 12-year trend line. I don't think the 300 moving average is going to provide support, provided we've lost a 12-year trend. And this is another thing about the 12-year trend, right? The 9-year trend line or 12-year trend line. It doesn't necessarily mean because we lose this level, we're going to go to new lows. And I think a lot of people get a misconception about that. Just because we lose this level, it doesn't mean we're going to go to new lows. All it tells us is that we're losing macro predictability in the trend. Now, we go to new lows once we clear this low. If we break this low and we lose this bottom, that is confirmation that we will be going down to new lows. But losing this trend line And as Wolf said, we could potentially double bottom at this level. Losing this trend line is not enough to tell us where the price is going to go. What it is telling us is we're losing macro predictability. We've lost a 12-year trend line, is showing weakness, and that could potentially continue downwards. It doesn't mean it's going to. I think that's a really important thing. It's not confirmation, it's just indication. Would you agree on that statement, Wolf?
Yeah, I think so. It is an indication. Look, and the thing is as well, it's like you said, macro predictability. That's exactly correct. Now, I would think that this line would be, and I think you'd agree, it would be lost eventually. So it's happening now. It's not really particularly surprising. Lines that go straight diagonal on a logarithmic scale generally don't last. I mean, it's lasted 12 years, but obviously I'm saying long term. They can't, because the price can't keep up with the line. It just goes too fast. But yeah, I don't think just because we've lost the 12-year trend line, we need to go to 6K. Like, a lot of people are saying stuff like that. It's like, well, if there was a 12-year support line where you lose it, surely we see a 90% drop. I don't think that's necessarily how it works. Like you said as well, I think you probably agree with, and I think we have pretty similar predictions at the moment, to be honest. I think that, there is definitely a chance of a higher low, but I think the most likely scenario here within the next month is we retest the bottom at 17.5K, and, only time will tell whether that will hold. And I think below that, if we were to go below that, what would your targets be? Mine personally, as I said, would be 11.5 to 13.8.
Yeah, well, this is an interesting point, right? Because I've been talking about this trend line so much on my channel, and a lot of people kind of took even though I've been telling people, we're gonna bounce to this trend line, we're gonna bottom out of this trend line. This point here where I was expecting to bottom is very different to this point here. I think that's a big difference. That where we expected the bottom was 17,000 or 18,000 over here. The price is now around 20,000. My prediction wasn't that we're going to, bottom at the trend line every single time we touch a trend line. It was just at this point here. Now, I did expect the bottom to be in here according to the previous, obviously the previous bottoms, of the data we've got. But, we always had a backup plan, and we've had this backup plan for a very, very long time. Even if I go back to my Telegram channel posted in April, even if I go back to my trading view posted back in April, I said that if we do lose that macro uptrending line, I can bring up the post if you want to see it. If we do lose that macro uptrend line, I do expect we could see some sort of move down to 13. And although I haven't been discussing this on my channel, I haven't been talking about it on my channel, there's no need to talk about this while we still remain above, obviously, A, our local low was the bottom is assumed in, and B, this level here. So I don't want to be talking about, $13,000 when we're still, you got a lot of support. There's no need. That is still definitely a possibility. But in my eyes, there is still no point talking about that. Besides just a quick notice of, this is possible. There's no point really talking about it until we lose these levels, because as of what stands right now, the bottom is in. We are finding support on the 9-year support line. We still have support on the 2017 high. We're still over 300 SMA, even though it's not a good indication of support. It's a good indication of average price movement over a period of time. There's still some positive things. And if you take a look at, the CPI and the Federal Reserve and what they're expecting to do with interest rates, although we do expect it to be hawkish and bearish and blah, 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 there is still a chance they can go 0.5. And I think if we go 0.5 in September, we may see some sort of relief in the market. We may see the DXY drop down. We could see some sort of reversal. But moving on from there, I think we've talked a lot about the macro, but I guess, everyone wants to hear about the macro. Everyone wants to know, what's going to happen next on the larger time. I just want to bring everyone back to reality and and just say that it doesn't really matter. What matters when it comes to making money was, at the end of the day, everyone here is trying to make money. Everyone in the market is trying to come out of the market with more money than they came in with the market with. They're trying to profit. As a trader, myself, I'm speaking for myself and Wolf, we don't give a hell, we don't care, we're just here to trade the trend. Right? We just make money regardless. Doesn't matter what happens. But I think a lot of people need to zoom out a little bit and say, well, why am I so worried about what's going to happen in 6 months from now if I'm just trading the trend? I should be focusing on what decisions I should make today, how I should react today to make profit today. Like, for example, in VIP, yesterday, the market dropped massively. We're in absolute fear, absolute panic. We were losing the 9-year support line. We lost major support lines. We were going down, huge crashes. Everyone's in panic. And we said, look, now is not the time to panic. Now is the time to be looking for opportunities. Even though we lost the 9-year support line, a support line that I believed would hold for at least a while longer. And Wolf said, it's eventually going to drop. Yeah, that's correct. It's a diagonal it's a diagonal trend line on log scale. It's not going to hold forever. We can't just keep going up exponentially. At some point, we're going to have to break it. But you have to look at the charts for what it is and trade it for what it is. We got a 700% profit on this trade, 100x leverage. We got an awesome profit on Bitcoin. And this is just from trading the trend. So you have to look at what you can do now to profit, because that's going to give you more results. Because like I said before, even if Bitcoin goes down to $13,000, even if it goes to 10,000, even if it goes to 17,000 again, do you think you have the conviction to be able to purchase at those levels? And that's a question you got to ask yourself, because a lot of people didn't purchase at this level, even though we had significantly more evidence we were going to see, if not a bottom, but a significant 46% bounce, which we did see. So I pose a question to you. A lot of people are out here screaming, I want to see 12,000, I want to see 10,000, I want to see this, I want to see that. And it's a lot of I wants. But what will you actually do? That's the question you need to answer to yourself. I think I'm gonna just pop it on pause for a sec there, Wolf. I think what do you think? Do you think what you should be doing now, how you should react now, is always going to be more important than what's coming in the future? What do you think?
100%. And that's look, unless you're a long-term investor, which I know there's some long-term investors on our channel, whatever, but we're generally traders, and we generally attract people who trade. And whether they think of themselves as traders or not, even if you're entering a position once a week, you're a trader. You're a trader. And if you don't keep all your Bitcoin in cold storage and plan to never touch it, you're a trader. You'd be a swing trader, whatever, but you're a trader. So focusing on short term is always going to be more important than focusing on long term. First of all, short term leads to long term. Short term price movements lead to the long term macro playing out. Second of all, shorter term has way more potential than the long term. If you're buying Bitcoin at the bottom, until the halving, you're looking at like a 2x. So that's a 2x in 18 months. It's not particularly prosperous. I mean, it's prosperous in terms of markets, but generally speaking, in terms of crypto, that's pretty pathetic. And especially if you're a trader, you're used to making a lot more than that. So I think, short term's a lot more important. And like you said, not many people have conviction to buy at the bottom. If they did, we wouldn't be at the bottom for very long. But we don't see that. We see the bottom drag out. Go back to 2018, drags out for months. 2015 drags out for months, literally 10 months in 2015 or something, maybe even a year. If people had conviction, we wouldn't see those long rounding bottoms. We'd see the V-shaped recovery like we saw in COVID. So, I mean, I don't need to try to convince you that you won't buy at the bottom, maybe not on an individual level. I can tell you right now, most of you probably will not buy at the bottom, even if you know it's likely to be the bottom. You just can't bring yourself to it. And it's not to say that I blame you. It's just saying, maybe that's a good indication that focusing on short term is more important. Especially when considering there's not much reward for buying the exact bottom. So I don't know. Short term, I definitely agree with you there.
Yeah, and that's another thing. It's like at the end of the day, you don't have to buy the bottom to make money. I think a lot of people are in this holding mindset still, even though they got wrecked on the way down holding, they're still in this holding mindset that they need to catch the exact bottom to profit. And it's not the reality. The market provides countless and countless opportunities to profit every single day in every single market direction, every single market move. You just have to learn how to find it. You just really have to learn how to trade it. And that's why myself and Wolf highly promote, actually spending time learning how to understand market movements, learning technical analysis, because then you don't rely on bull markets to make profit. You can profit in bear markets, you can profit in sideways markets, you can profit in high periods of volatility. You can literally capitalize on every single moment if you know how to trade. I think let's quickly dive into the very short-term time frame, just because I want to update everyone what's happening at the moment, where we can see the price going. So, and then I want to talk about the RSI on the larger time frame, talk about what would trigger the next collapse, the next drop down, what we would actually need to see from a technical standpoint to get confirmation of a move downwards besides this price action, and then I'll throw it back to you for anything. So, like we said already, this 20,300 level is going to be acting as a major resistance. I would like to see a push over this level. I think we can confirm a move back upwards to this level here. Retesting that upward trending support line of the ascending channel, or the bear flag, like Wolf said. would be a probable move if we are able to push through this resistance. If not, of course, we're heading back down into this level. I think if we test this level again, we're not going to be holding, we're going to be pushing downwards. What I would be doing now, I would not be looking for shorts or longs. I'd be waiting right now. I would be looking to enter shorts if we lose this low over here. So losing this level over here, I'd be looking to short the price back down to this level at around 19,600. If we close back above over here with hourly candles, I'd be looking for some confirmation that is now support, and then looking to long back upwards with a first target of this level. So waiting not for just 1 hour candle above it, waiting for some confirmation that this level has been tested as support, looking for longs to open with 2 targets, and obviously losing this level, again, confirmation below, I'll be looking for some shorts downwards to these levels. That's how I'm going to personally play the short term. That's what I'm going to be doing, waiting for that conviction, waiting for the confluence, and just trading with the trend. As for the larger time frame, if we go to the 3-day chart, I hope this is the right chart for it. I want to go ahead and bring up, actually we might go to this chart, it might be a little bit better for it. I'm going to go ahead and bring up the RSI, and something I've talked about a lot on this channel, and not so much in the last few months, but a lot around about February to March. We talked a lot about the RSI, particularly the 34.34 on the RSI. I want to go ahead and try find where that is. Let me go to a 3-day chart. The 34.34 on RSI, in my opinion, is one of the most important levels on the RSI. If I can go ahead and find 34.34, around about over here. I think it might be the daily. I'm just trying to remember what time frame I use it on. Give me 1 sec, Wolf.
No worries.
Looks like I'm losing my mind. I'm gonna have to go through my analysis again. The 34.34 on the RSI should be on the 3 or 4 day. I can't remember. I've lost it completely. 3-day, or maybe it was a completely different chart. Anyway, I've got the post somewhere. I'm gonna go ahead and bring it up on Twitter because I can't find where it is, but I've got it on Twitter. You go through 100 charts a day, you start losing your mind. Here it is. All right, the 34.34 on RSI. It is a 3-day chart. So we can see every single time we lose that 34.34, the price, the RSI actually drops below the 34.34, indicated by these green lines. We see a significant sell-off, and this is every single time, and I can go further back on the charts to show you, but this is just the last 5 or so instances on the chart. We see every single time the price of RSI drops below the 34.34, we see a significant sell-off. We're talking 50%, 20%, 30%, and we see the RSI currently on the 3-day. If we go back to that chart on the 3-day, we can see it's coming down to the support line over here. So it's close, but it's not quite there. This is a support line for momentum, and I think a lot of people misunderstand what the RSI is used for. It's to indicate momentum. So as momentum loses major supports, as the momentum drops below major points of confluence, we have this massive amount of selling pressure moving forward with the price action. So it kind of drags the price action down as these major areas of momentum flip. And it causes these massive cascade effects of price, so the price just basically collapses. So obviously we are quite close, and that could land us pretty close to 17,500 if we do come down. But that's what I'm saying. If we do hit 17,500, I do believe the RSI will be crossing over 34.34, and I do believe that will trigger a cascade effect downwards and potentially collapse us even lower to that 13K level.
Yeah, I'd agree with that.
Cool.
I'd also like to say, now that you have the 3-day RSI up, there is also, and you know about it already, a downtrending line of the RSI that's interesting to watch for an upside move, because generally the RSI breaks before the price. So if we do see a break of that downtrending RSI line, that might be an indicator that, hey, actually it's not looking too bad. And maybe it was a fake out below the 9-year trend line if that does happen. That's what I'd say. Yeah, I suppose, if you've got nothing else to say, I will say as well, watch out for September, guys, because there are a few big events in September. I'll read them out now. We've got the 13th being CPI, which is obviously important because the last CPI reading indicated inflation might be top. So it's very important to see what happens there. So that's the 13th. And then on the 19th, we've got the Ethereum merge. And then on the 22nd, we've got FMOC. So big September coming up. On top of all of that, September is typically the worst month in Bitcoin's price history. Whether that actually means anything or not is debatable. Could just be a coincidence, but it is worth noting. So September will be a big month.
Yeah, September's going to be pretty brutal because, historically September performs. I think out of the last 10 Septembers, we've only had 2 green Septembers, which is pretty insane.
Yeah, something like that.
But just to wrap it up, guys, obviously we still are in that bear market, of course. The bear market is still technically in. We are still in this macro descending channel. This is the bear market. For us to flip the bear market, we do need to break this downtrending resistance, okay? For us to start flipping bullish on the midterm, we need to start breaking through 30K. And for us to flip macro bullish, we'll need to be pushing through this level here. And the bull market will commence over this level. Just keep it nice and short and sharp. Until then, it's going to continue within this range, maybe pushing upwards, sideways, downwards, whatever. And obviously, Wolf did bring up the RSI. And the RSI pattern over here, which is our falling wedge, is indicating at some point we will get that reversal. And waiting for the break over this descending trend line over here will trigger that reversal and trigger that price move upwards. Wolf, do you want to talk about Crypto Academy?
Sure, yeah, I can bring it up. I'll bring it up. I'll get my screen shared. Hold on 1 second. Oh, you've got it up? Awesome. Yep. Okay, so on his screen right now, we have the Crypto Academy, which is a course that we've developed. Essentially, Become a Trader is the name of the course, 10 units. If you go to the website, you'll find it in Whale's pinned comment or description, and you can read the bio there. Got a few paragraphs for you, and you can also see what units we have available. Unit 1 to Unit 10, we're looking at candlesticks, indicators, market patterns, stock market psychology, how to find trades. I've got 62 students at this point in time, so you can become a 63rd student if you wanted to, and by doing that, you need to email cryptoacademycourses@gmail.com. It's free, and we'll send you an email, kind of like a pamphlet, and a video explaining what the course is, what it looks like, and what you'll receive. So even if you don't want to buy the course, even if you're not really interested, chuck us an email for free, and we'll send you the information. You can make your own informed decision there. So I think we'll end the video there. Is that correct?
Yeah, that's it. Remember, head over to Wolf's channel, give him a like, give him a follow. Show some support to Wolf, because he's a great analyst, he's a great mate of mine, and obviously, even though me and Wolf maybe appeared to have different opinions, and that really just stems from, I have a higher risk tolerance than Wolf. I'm more willing to take risk, therefore I was more willing to buy this point here, and Wolf didn't, but that doesn't mean Wolf didn't acknowledge the significance of it. And just because I bought that level, it doesn't mean I'm super bullish. I still understand the move down. We basically, I would say, agree on almost everything. As we do a lot of analysis together, we just kind of spread our message in a little bit different way, and that different way comes from the basis of which we have slightly different risk tolerances and trading styles. But yeah, definitely head over to Wolf's channel, give him a like. He's just over 11,000 subscribers now, so show some support there. All right, we'll catch you guys in the next one. See you later. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and WolvesOfCrypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.